Welcome everybody. I hand you into the capable hands of our Senior Director for the Business School, Dr. Joseph. Thank you very much.
Thank you and welcome to everyone to our second webinar of the year. And this one in particular is really a deliberation around the budget speech of yesterday. And as many people might be aware, the Pitso is that a rallying call to community members to come together to discuss many aspects. And for this panel, we've got Mr. David from the Efficient Group. Welcome. We've got Mr. Azam Thanga from the RMB, Chief Economist and Researcher there. We have Ms. Annabelle Bishop from Investec. And I think we're still waiting for Dr. Lumkila to join us, and hopefully he'll join us as we go along. For this particular session, we have Professor Raymond Parsons, who's the chair of our advisory board, is going to be leading the panel in the discussions about the South African Finance Minister's budget speech. So, Prof. Parsons, thank you very much, and we can continue.
Thank you, Dr. Joseph, and good afternoon to everyone. Let me identify myself with the welcome that our Chief Director has extended to all the participants and to the panel who will be sharing their thoughts with us today. Now, I might remind you that that is, by the way, the 30th budget of our democracy, over which we've had 10 ministers of finance over that period. And each, if you reflect on the challenges that each one of them has faced, it makes a fascinating history and yields a number of important lessons. But our purpose against that background today is to talk about the Finance Minister Godongwana's budget yesterday and the extent to which we believe it has responded to a challenging set of global and domestic economic circumstances. And when you look at some of the reactions, ranging from being called a very sober budget, a very balanced budget, a realistic budget, a credible budget in the circumstances. So I want to start by giving each one of the panelists who are now available an opportunity just at the outset to give also a broad reaction. What was their broad reaction to the budget strategy and what the Minister of Finance said yesterday? I'm going to ask you, Annabelle, if you would kick off, and then I will move to the other panelists.
Yes, hi. So my impression was that it was a better budget than expected. We saw some positive reaction in the financial markets as a result. We did see no disappointment finally on the Eskom front. You know, the last few budgets we've been waiting for government to give Eskom debt relief, and finally now it is actually been announced. So I think from that perspective, it gives us some greater room for the utility to rather use monies that it would have used for debt servicing, or obviously having to obtain those monies from government, to now obviously have greater space to spend on other areas that are necessary, operational infrastructure, etc. I think the key point for me, though, despite the debt levels obviously rising in the projections because of the debt relief offered to Eskom, we did see some fiscal consolidation coming through in other areas. And of course, that is a positive. Both the primary surplus that was announced for the current fiscal year and for the next few, the quickening in the downward trajectory of the consolidated debt drop to 2030. Of course, it doesn't mean that the debt levels or ratios are lower. They are higher because of the debt relief, but government did note that quicker downward trajectory. But let's also be quite clear as well that the fiscal deficit shows consolidation dropping down to 3.2% at the end of the medium-term period. And of course, that is in line with what was shown in the MTBPS. So those are some positives I took away. Just to keep it short, I'll stop there.
Thank you, Annabelle. Isa, what was your first reaction, your broad reaction to the budget?
Thanks, Prof. From my perspective, this was a good budget by necessity. As Annabelle mentioned, we now have details of a solution to Eskom's debt problems. Secondly, we have one of the major reforms that I would characterize as quite big since 1994, as far as providing 125% deductible income for private companies to invest in renewable energy without a cap. I think that's quite big. Also looking at the subsidy, almost a subsidy given to households of up to 15,000 rand for rooftop solar panels is also quite important. And we're likely to see many households going to that space. From a household perspective, full adjustment for fiscal drag, I think that's quite important, some 15.7 billion rand. And we also have no change in the fuel levy. That's 4 billion given back to consumers, which take into account the high cost of living that we are seeing currently. So this budget has been quite good in addressing the major issues. Nothing on the basic income grant because it has already been provided for until March 2024. And the fact that it's not budgeted for beyond that shows National Treasury's resolve to say we need something, not just a cash transfer to the unemployed. I think I'll stop there. Those will be my major takeouts.
Thank you. And what about you, Davi?
Thank you, Prof. I'm slightly less optimistic. First of all, I think certainly a good sign is that the minister is trying to cut back on those discretionary expenditure over which he has some control, and I think the primary surplus attests to that. But the reality is that all the toys that the Minister of Finance can play with, they've all been broken. And I think he's done as good job as possible with what is available to him. What I'm concerned about is his estimates on economic growth. I don't think that is going to realize. The risk certainly is to the downside. That means that potentially his revenue can come under pressure because of weaker economic growth. And also the commodity cycle that really contributed quite significantly to the fiscus the past 2 years, that commodity cycle has cooled quite a lot. So the revenue side, I'm not so sure those numbers are going to realize. There certainly is a risk on that one. On the expense side, I'm also not so sure that he will be able to achieve his numbers there, because especially when it comes to the remuneration numbers for the civil servants, they're demanding, as always, ridiculous increases, and he's penciled in significantly less than what they are demanding at the moment. So if economic growth comes in lower than what he says, then of course all the ratios like the deficit and the debt ratios will also move in the wrong direction. Something else that I think, and we certainly got to talk about that, is what's happening to Eskom. And what the announcements at Eskom is nothing but a privatization of Eskom. So it's a backdoor kind of privatization. Of course, it is not a policy change, but the operations of Eskom is being privatized. Either you make use of the private sector, or I'm not going to take over your debt. That is one. And an international organization will be appointed to investigate what is going on at Eskom. So obviously, the president is quite serious about fixing the problems at Eskom. And then, of course, there's a question about the new Minister of Electricity, what his role is going to be. But what we are seeing is the beginning of the end of Eskom. And I've done some very, very interesting calculations on that, but perhaps a little bit later I can share that with you. Thank you.
Thanks. Thank you. I want to hone in on Eskom because that's a big ticket item in the budget, if not the biggest one. And you almost call it a sort of electricity budget, because that's really around where the other decisions now revolve. We also heard this morning that parts of the country have moved onto level 7, and overnight we lost the CEO of Eskom. So quite clearly, we need to focus on this. So this big ticket item, also in regard to the subsidiary but important issues of the tax incentives to business and to the households in terms of the solar paneling. I think the impression I'm getting from the panel is that this does represent a step change in how we're dealing with Eskom and the way forward. So can I invite you, Annabelle, to just probe this a little more deeply in terms of Eskom as a big ticket item in the budget?
Yes, I agree with you, Professor. I definitely think this is a sea change. I think both in government's approach, not just to Eskom, but to state-owned entities in general. And of course, talking about wanting to reduce government's contingent liabilities. So the debt of these state-owned entities that government guarantees. So that's something we actually heard about at the MTBPS. Also, as well, of course, reassessing their worth. Do they need to continue as state-owned entities? We, of course, saw government already paying down some of the SOE debt, to my point earlier, to reduce the contingent liabilities for some of the smaller SOEs. I think in general, government wants to make them fitter, more able for purpose, and of course, able to support themselves. So we do see that come through in the requirements for this debt relief for Eskom. The fact that I think someone's not on mute in the presentation. Maybe all the listeners can mute themselves. So I think that, we do find ourselves in a situation where government's going to be quite serious about trying to fix Eskom. And hopefully this becomes a template also for Transnet as well, because we have a very big looming crisis there on the logistics front, both for rail and port. I think, some of the key points also that maybe that we haven't touched on is that the mining sector, the Minerals Council says that it could take 6.5 gigawatts off the grid from a capacity perspective by actually producing its own electricity and using that. And of course, that will be 6,500 megawatts. So that's also a positive step forward as well. As the private sector being encouraged, both households and businesses, to provide a lot more of their own electricity. I think this is really the only solution that we see going ahead for Eskom. Eskom has tried over the past decade or more to go it alone as the only electricity provider in South Africa. Key for me will be the renewable energy program, not just to mitigate climate change, but also, of course, as well to crowd in the private sector. And for that, we need to see some further changes in regulations as well. There's been a lot of change, let's not deny that, but there still are some little impediments to try and, really encourage as much participation as possible. Here, we're not talking about blocking them, we're actually talking about something different, to make it as a smooth and easier path and to really be as encouraging as possible to get the private sector to produce as much electricity and obviously put it on the grid for resale. Lastly, let's not forget transmission. There's no point in producing a lot of electricity if we can't transmit it around the country. And of course, that's been an impediment to some renewable energy projects that were looking to go ahead on the coast, on the Cape.
Isa, can I put two supplementary questions to you about Eskom in the budget? The first is, how do you see the conditions being applied and being settled on which these extra funds are going to be made available as far as Eskom is concerned? And secondly, how do you see this term? Do you see this as a more or less a sort of irreversible change as far as Eskom is concerned, that from now on we can expect better news?
Thanks, Prof. I think on the first one, the conditions that have been placed, one is to say Eskom must not borrow from the market for the next 3 years as long as the support is being given to Eskom from National Treasury. Secondly, they will have to invest in transmission, which will enable the independent power producers to add to the grid. Those are the most important conditions. All others, as far as I'm concerned, are irrelevant, or they would not make Treasury not to give Eskom money. For some of these conditions, we have been told, SOEs must meet these conditions, particularly Eskom, and they continue to fail historically. And they continue to be given money. Eskom is just too big to fail, at least for now, such that even in the event where they are not able to meet these conditions, they will continue to be given money. There's just no other way. And then on the second aspect of your question, are we to see a positive out of these decisions that have been made in the future? I think only time can tell. One of the things that we know very well with the, as far as implementation is concerned in this country is we have failed to implement a lot of the policies. So once bitten, twice shy. We wait for the evidence.
I think I might also say that Eskom is too big to succeed anymore, and that's part of the solution we have to find. Could you come in here, Davi, and also the issue that you raised, that this is an implementation issue that reflects a step change that will make a big difference. And could you just amplify those earlier remarks that you made? Seems to have dropped off.
Yeah, Prof. Raymond, yeah, I'm indeed not Davi. We've lost Davi for a second.
Can we recapture him?
Capture is a very strong word, Prof. Raymond, but we'll try our best. Maybe first direct it to one of the other places.
Yes, I think that's what we'll do. Perhaps, Annabelle, you could amplify once again. You see, one of the points I noticed in the budget statement was that the Treasury would now have oversight over Eskom. Now, the question comes back to the question of coordination and implementation. How many more levels of oversight are we going to have as far as Eskom is concerned? And is this new minister perhaps going to be the one who will coordinate the other players, including the National Treasury?
I would imagine he would be, otherwise what would be the point of him? So I think, that perhaps is, the starting point. But I agree with you, government has been very good in implementing multiple layers in response to problems. And of course, we see that also with Operation Blue and Lela as well. And, that has obviously been a response by putting in committees and, working groups to try and address the issues and the problems. I would say that, there is obviously something very positive coming out the budget. That's obviously the debt relief. But of course, from the government side, from talking about the management, I would say perhaps we don't need so many multiple layers. I disagree with government. I would say that Andre de Ruyter is up for the task to run Eskom. I think that he's been faced with insurmountable problems and really blockages and difficulties. I think that government is perhaps starting to realize some of these as well. But the bottom line really is, to try and get South Africa back onto a strong footing for the security of electricity supply. And that's something we don't have. It has a very negative effect on investors. It has a very negative effect on our economic growth outlooks and therefore on global financial market confidence. We saw the rand weaken very substantially to date this year. And one of the reasons has been substantial foreign sell-off from our portfolio assets as a consequence of growing negative investor sentiment towards South Africa. Yes, there's been other factors as well, and that's of course been the increased hawkishness of the Federal Reserve Bank in the United States, which has placed us in a position where obviously South Africa not hiking its interest rates at the same pace as that of the United States has eroded our risk premium, and of course that has obviously had a negative impact on the rand as well. But returning to Eskom and returning to some of the problems that we obviously face in South Africa, first of all, it's not something we can fix quickly. We've even seen the quick fix of car power ships being blocked by our environmental ministers. And of course, there we actually find the fact that they could have, come in last year, but of course, having submitted incorrect or perhaps not fully full documents has obviously stymied that as well. But let me pass your question over to Davi now, because I think he's back in the mix.
Yes, I see you are back, Davi. Did you hear the question that I posed about coordinating, trying to fix Eskom? And the fact is that although some of these are the right decisions in the right direction, I was referring to the fact that, for example, in terms of the budget speech, that the National Treasury will now also have oversight over Eskom. And I was simply making the point, I hope that the new minister who's going to be appointed will be able to coordinate all the different players who are supposed to implement the right solutions. Looks like we still have a problem with Davi and with connectivity. Isa, I want to ask you whether is he with us?
Am I the only one still on? I think Isaiah is with us, yeah.
Isa, are you with us?
Yes,
Thank
I'm
goodness.
here.
I wanted to ask the question then, in terms, just a supplementary question. It apparently that parts of the country are now moving on to level 7. What is that telling you in terms of the bigger picture of what we need to do?
think first it says this year's growth conditions are going to be far more difficult than what we thought. Eskom told us they have a shortage of 4,000 to 6,000 megawatts of energy. And we had made an assumption that at the minimum it's stage 4. But if we are now moving to stage 7, it means the small business sector is going to be decimated. They can't deal with the costs of buying generators and diesel continuously. The hospitality sector is also going to feel the pain, which is one of the sectors that can employ people with relatively low levels of skills. But in terms of what needs to be done, I think it is what the finance minister have responded to by liberalizing the sector, allowing private companies to invest in solar, and then they can recover 125% of their investments. That is privatization by stealth, essentially, because government has failed. The private sector would have to push government to do it. This is what I would say. That's the bigger implication of this stage 7. We are going to see more companies going putting rooftop solar panels going off grid, and that would shrink the available market for Eskom.
Thank you. I see you are back with us, Darby. Just for me to repeat the point, can you hear me?
Yes, I can.
I was putting the original question to you that part of the budget speech indicated that the National Treasury will now supervise Eskom as well with this whole process of dealing with the debt. And I was merely posing a coordinating question, whether the new minister that still has to be appointed on this matter, will it be his major task to coordinate all the different players who already have a say over Eskom in order to ensure that what we intend will be translated into effective action as far as Eskom is concerned?
Yeah, the new project manager, as they call him. Well, what is happening here, I think what the president is trying to do is we're running a dual cabinet here. Because we have a minister responsible for state-owned enterprises, the minister for energy. We have a deputy president responsible for electricity. We've got a committee responsible for electricity. And now we have a minister of electricity responsible for electricity. And I'm afraid this is more a political decision than anything else. What Treasury obviously is trying to do now, I think, and this is an example where reality meets ideology, is that, and I absolutely agree with Isaiah, is that this is the backdoor way of trying to privatize Eskom at the moment. And that is, Treasury wants to make sure that Eskom is going to concession out all its power stations to the private sector. That's privatization of the operations, as an example. And I did mention apparently some international task force that will investigate what is happening to Eskom. If you don't do this is what Treasury is saying, I'm not going to take over your debt. But there's a bit of a silver lining here, and I did mention I did make some calculations, and I'm actually in a way quite excited about this. In 2007, well, I'm just not going to go into the detail, but in 2007, we used, say, for example, 100 units of electricity to produce 100 units of the economy, of GDP, say, for example. Today, that number is, if you use 100 units of electricity, you can produce 135 units of the economy. So roughly speaking, we're using something like 40% less of Eskom to produce the same kind of economic output. Now, the reason for that is we are, well, much more efficient as far as electricity consumption is concerned, but we're also moving away from Eskom, and that will continue. So the market is simply moving away from Eskom, and what we are witnessing now is the slow death of Eskom. Eskom is going to come to an end, the same way that the South African Airways is coming to an end, and the same way that the South African Post Office is coming to an end as well. So this is indeed a way of privatization, and I think, again, let me repeat myself, this is a reality actually coming into contact with ideology.
Can I just also pose a question to you, perhaps Annabelle, to start with? These other decisions, which have been broadly welcomed about the tax incentives for the solar paneling, both for business and for the households, But there's been quite a negative reaction from some of the energy experts saying, yes, well, it's probably not going to make much difference. It's not substantial enough. It's not generous enough. What is your reading of that step in regard to the solar panels?
I suppose, Professor, it's the typical economic answer: shortage of resources. Government's very constrained on the one hand by its finances, and giving these incentives, both on the business and the private sector front, comes to about 9 billion, and that obviously means that they're going to have a lower tax take than they would have estimated against the MTBPS, and of course as well also given the relief for fiscal drag, so 13 billion in total relief. Also, of course, as well, they didn't increase the fuel rebate. They didn't increase the fuel price. So really taking all of that into consideration, that would mean that government, obviously already in a constrained fiscal position, battle to give away more. On the other hand, in order to incentivize households, the more incentive, the better. And of course, the same for businesses. Let's also not forget as well that on the diesel system front, they're also providing full or partial relief on the general fuel and RAF levies for food producers. That's been announced as well for people who manufacture food, to limit the impact of power cuts on food prices. So it's quite a broad range of areas they were looking to try and assist on. Also, of course, as well to provide a bit of a bit of moderation towards the very high cost of living that we're experiencing by not putting through higher fuel prices. But of course, as you said yourself, it is quite a modest incentive, but nevertheless, it is an incentive. I think every little bit helps. Perhaps maybe we could look at it in this way: a household that might have been thinking of getting 6 solar panels might get 1 or 2 more because of it, and every little bit helps. So so we need to obviously look at the positives here, but I think maybe more from a business perspective, that might be more where the disappointment came through. And of course, that obviously is where we saw the extension, I think it was called, of the 12B incentive. But really just, having a look overall, I think government is also participating in trying to reduce the impacts of climate change. I don't want to go into the very specifics of the incentive towards the business sector, but perhaps as we move through next year and the follow, we might actually see more coming through as well. In other words, I see some of these incentives for the business sector are looking for 50% cost reduction 1 year, 30, 20 in the next few years, and obviously they're not infinite, but perhaps government might actually extend them, and that would actually be quite helpful as well.
I want to raise another issue which was referred to in the budget, but which also resonates with certain developments elsewhere this week, and that is the issue of the grey listing of South Africa, to which the Minister did refer, but it's something that's on our minds this week. And how important, Isa, is this decision for South Africa that is pending?
It's very important. As a baseline, we expect that we will be grey listed on Friday. The decision will come in from late afternoon. If you also read in the budget, listening to the finance minister's speech as well, it seems National Treasury already also expect the country to be grey listed. As far as the impact on markets is concerned, we don't think it will have an impact, because if we look at countries that have been grey listed before, there have not been enough evidence to say markets sell off in a disorderly manner, except the initial reaction to the headlines. We are, however, concerned as far as the increase in the cost of compliance for corporates. I'm sure you might have received an email from your bank telling you to send proof of your address at some point. Now banks or financial institutions are now under pressure to re-verify the source and the use of funds, particularly those that pertains to cross-border transactions, which means there is going to be an increased requirement for documentation and proof that might come with time delays for concluding transactions. That's where the cost is going to come from. But as far as markets are concerned, we don't see a negative impact coming. It's already priced in, the markets expect it, but also talking to offshore clients or investors. They already invest in other jurisdictions that are grey listed. So it's not going to be unique with us. I think the one thing that we can look out for is the response from government in terms of amending the legislation has been quick. But it's not in the amending of legislation where we have shortcomings. It is in the implementation, which requires the law enforcement authorities. The NPA, the South African Police Service, the SIU must be able to investigate and prosecute. In that case, in the budget, there was more funding that was given to SARS, to the NPA, and to the SIU, in part to implement the recommendations from the State Capture Commission, which then speaks of some of the remedial actions that the grey listing is going to require us to do. So I think we are likely to come out of the grey listing sooner than the median of 3 years that we've seen in other countries that have been grey listed.
I wonder if I could ask you, Annabelle, just to follow on that point about implementation. Would you agree that the emphasis must fall on doing certain things sooner rather than later so that we can get out of it within 3 years? And what do you think is the biggest challenge on the implementation front here if we want to be able to turn the situation around?
So I think if we maybe look at the challenge first, Mauritius experience, they got out of grey listing in about 18 months. And of course, that was very much because of a coordinated approach. But let us also be clear as well, they are a small country. They worked quickly and well together, and they didn't have, as much opposition as we have in South Africa. I do think, however, that, what needs to be looked at is not just a financial industry aspect as perhaps it might narrowly be understood, i.e. a bank problem. It also extends across the board to any financial transactions, and that could be real estate transactions, for example. So people working in the real estate sector, making sure that there you have the correct application of the regulatory requirements. That is also a key issue as well. Now, if you think of how many small and medium operations we have in South Africa, I think we start to get an understanding of the quantum or the size of the problem. And of course, that's going to require from government tight implementation of regulations, and of course as well, government will probably like this, more layering of bureaucracy to ensure that we actually get the compliance. That's probably what we will see. But I think, the bottom line for South Africa is that it is something we do need to get out of. We have seen from a few years ago, when there were quite dire worries in the bond markets about South Africa seeing a debt default even in a 5-year time period because of the poor state of government finances, the weakening of government finances, we've managed to turn that around very strongly, and we shouldn't underplay that in terms of the recent budget in the past few, even given the impact that COVID has had. But looking forwards, we now have a new crisis amongst many other crises, and of course, that is that if we get grey listed tomorrow, then of course we will need to work very actively and quickly to try and get ourselves out of that situation. It doesn't mean that we'll be able to get out of it quickly. It just means that we have to work quickly to eventually get out of it. So this is where we are standing at the moment for South Africa. The financial markets, I think, are fully priced in the grey listing, and that is why the rand has been so very weak this quarter. It's failed to strengthen alongside some the other emerging market currencies, which it normally does. Also typically see strength this time of the year, and that also, of course, has fallen away. It's not just a US dollar strength story. The rand is weakened against all the crosses, against the euro as well as the pound. So I think this is something which has been heavily factored in. I think you do still sometimes see a bit of a knee-jerk reaction when we get the announcement, but I think that markets have got quite a lot of negative areas to punish South Africa with, of course, the electricity crisis as well, and the weakened economic growth outlook. So I think many different areas for government to work on, and sadly, I think a lot of it's coming back to the presidency, because I don't know why, but they said after the budget we'll have a cabinet reshuffle. So let's hope we do get one where we actually then get some better action coming through from perhaps new members in that reshuffle.
Thanks, Annabelle. Yes, Davy, what's your take here?
Yeah, I must be honest. I thought that we had a pretty good chance of not getting grey listed because we did implement, and there was some new legislation on that implemented, and The minister yesterday, he sounded very sure of himself that we're going to get grey listed. So I think he's got some inside info on that. So it seems as if we're going to get grey listed. But he did make some funds available for certain kinds of crime, which increases the possibility that we're going to move back to the whitelist again. Is this going to impact? And just by the way, I just had a look at the rand. The rand is taking a bit of a nosedive as we speak now. I don't know what the specific reason is for that at the moment, but I think the financial markets, I think there could be a bit of a knee-jerk reaction. I think the rand's a little bit overdone. I think it can come back a little bit, but this is certainly going to impact on economic growth as well. I know that I do business with international financial institutions, and they keep on asking me more and more questions. They're putting pressure on me. Even South African financial institutions putting more and more pressure on me to make sure that I get more and more information from my clients. My clients are getting angry at me because I ask them to fill in all these papers and to build these paper tigers and things. They get angry at me. So this is going to affect trade and international capital flows, without a doubt, and it will be negative to the economy. How much, I'm not so sure, but with a bit of luck, we can move back to the whitelist again within less than 18 months, maybe during the year even. But thinking this is not going to impact on the economy, it certainly is.
If I could add, I slightly differ with that view. If you are an offshore investor that invests in emerging markets currently, and you decide, let's say you decide to move out of South African bonds, where do you go? Do you go to Turkey? Definitely not. Do you go to Russia? Definitely not. Do you go to Argentina? Definitely not. Bright sparks that you can look at is India and perhaps Brazil, but Brazil also has its own issues. And you look at South Africa, which has been saying we are doing structural economic reforms. There's now some evidence that it's, we are having some 40% implementation that we are seeing. South Africa then shows up as a positive story in a EM world that have a lot of issues. And these investors already invest in frontier markets that are quite risky. South Africa has deep capital markets. In fact, it is the first large emerging market with deep capital markets to be grey listed, if we do get grey listed this coming Friday. So looking at the history of countries that have been grey listed, there is just no evidence that there is significant outflows of capital out of a country that had been grey listed. That evidence, it doesn't exist.
Can I just add to
please, you want to respond?
Yeah, I agree with you in that South Africa's capital market is actually quite attractive. In fact, that's an investment, an asset class that I certainly favor at the moment because of very high yields that we offer and because of the reasons what you've mentioned, liquidity and the depth of the market and so on. And remember, these international investors, they open accounts in various countries and they are not really affected by this grey listing because once you've got your accounts open, you can move money around quite easily. So that's not an issue. But what I am referring to is especially when you do trade and you open new trade agreements and contracts and establish new trade with a new country or with a new company or whatever. In my case, if I open a bank account or a stockbroking account or I move money in and out of South Africa, for example, then it's a sled. But if you're a big international trader, then there's certainly not much of an impact on you because you open once the account is open, you can move money around as you want. It's quite easy to do that for the reason you've mentioned. And on top of all of that, South Africa is actually quite attractive, especially with the weak currency where it is at the moment.
I'd like to move to the next issue that I think we ought to debate before we conclude. I think the undercurrent here has been that really, if we take a snapshot picture of the budget, it looks very good. As they said earlier, it's been very responsible, it's credible, it makes best use of the numbers that have been available, best use of the windfall gains and the other issues that have topped up the tax revenues in the recent past. But I want to remind you of what the budget speech itself says, that the risks to the economic outlook remain elevated. That's in the budget speech itself. So the question I want to put to each one of you is, well, what do you think are the fiscal risks that lie ahead that could materialize? Let's start with you, perhaps Annabelle. What do you think are the risks we need to weigh that could blow our forecasts off course?
So I think the fiscal risks are high, and I'll start off with economic growth. The 2019 experience of severe load shedding saw economic growth drop down to about 0.2% for the year. I think that's where the Reserve Bank has based some of its forecast move on. We actually found ourselves in a situation where if we were to move, we've calculated to an average of stage 4 load shedding this year, that we would actually see economic growth of between about 0.4 to 0.6. We've got 0.7 for the year because of the improvement in the outlook for the global economy. Now, if we're going to see an average of perhaps, let's say, stage 6, we could drop that down towards 0%. In fact, actually probably move into recessionary territory. If you move into recessionary territory, it has severe effects, very severe effects on government finances from a revenue collection perspective. And of course, as a result of that, then governments, sorry, could someone mute themselves? I think someone in the audience is listening and they haven't muted themselves. So I think, if you move into recessionary territory, then you obviously find yourself in a severe risk for your revenue, which then, of course, in turn starts to push up your fiscal ratios. Let's also not forget that your GDP drops off. So again, your debt and your fiscal deficits rise quite significantly. The credit rating agencies might then look to downgrade us further. And of course, you then start to get a deteriorating trend and investors start to lose further confidence. So let's hope we don't move into that type of environment. But that's just one aspect of the fiscal risks I wanted to go through.
Isa, what do you think could go wrong, badly wrong?
The growth projections, if we do see an intensification of load shedding in a way that pushes the economy into recession for the full year, means we are unlikely to achieve the tax revenue collections that were tabled in the budget. That's a big fiscal risk. But I think there is an element of the supply of electricity that we are not accounting for. The investments by the private sector that is not connected to the grid. It might mitigate that. The second biggest risk would be the government wage bill. What Treasury is offering or what Treasury has budgeted for just before an election year might seem difficult to achieve, which would mean we might end up with more spending than what is budgeted for on wages. But if we look at the unallocated reserve, that can cover part of the slippage that will come from the wage bill. So effectively, Treasury is budgeting for fiscal slippage by having an unallocated reserve, which means it's not going to change the top line numbers because it's going to be covered within the existing budget. But nonetheless, the wage bill will remain a big fiscal risk. The third one will be a potential for further extension of the COVID relief grant. If there is political pressure to extend it to a large, cohort of recipients, I think that can become another risk as well. Given it's an election year next year, the basic assumption we make is it's unlikely that government will be able to take that away, at least not in 2024. So we pencil in a give and take 40 billion rand spending for it in the budget, which then might change some of the numbers. But so far, Treasury has not budgeted for it beyond March 2024.
Darby?
Yes, I agree. I totally agree. All I can add to that is that the leading indicator of the Reserve Bank has dipped down a bit. So there is certainly, well, that's of course not the only indication of what's going to happen, but there is certainly a possibility of the economy dipping into a recession and everything that goes with that, as explained by Isaiah and Annabelle, of course. What I can also add is that there's an election around the corner, and the Minister of Finance is a politician, after all. And if COSATU and other trade unions put more and more pressure on him and start threatening, remember, the COSATU is still part of the tripartite alliance. And if they start threatening or joining another political party or supporting another political party, then it's going to be very difficult for the Minister of Finance not to give a couple of more percentage points to the civil servants. And there are many of them, and they also vote. Keep in mind that as well. So yes, I think economic growth is perhaps the single most important threat. And then, of course, politics is also a threat to the fiscal stability.
Well, it seems that we're saying that the GDP is not only the gross domestic product, it's also the gross domestic politics. Two sides of the same coin.
Exactly.
Within the last lap, and what I'd like, by way of a final comment from each one of you, when we look ahead and we talk about growth and what needs to be done, are we putting too much responsibility onto the shoulders of the National Treasury and the Minister of Finance? Are we not saying that ultimately, to get the implementation you want, that he needs to make his numbers look better from various aspects, he needs a team effort on the part of the cabinet as a whole to ensure that what we need will be done? We are focused on the budget, but I'm asking the question by your final comment, is there a wider responsibility to ensure that what implementation is needed will in fact be secured as a team effort and not put solely on the shoulders of the Minister of Finance, the budget, and the National Treasury? Isa?
I think Treasury has a very specific role to look at our fiscals, to make budget allocations to social spending and public infrastructure, to ease the conditions for the private sector to invest. But beyond fiscal policy, there are very limited options that Treasury can do. The most important contribution they are doing beyond fiscal policy is under Operation Vulindlela, which is all the reductions of red tape that are taking place in various sectors, including electricity, water, the railway and ports. If we get those right, medium-term growth will lift, but that's a big if. But at least from the electricity sector perspective, what we are seeing is there is a liberalization that is taking place. It's no longer just talk. We are seeing the liberalization of the electricity sector. That for me gives me confidence that we will get to a point where we reduce load shedding significantly in a manner that it stops being a constraint on economic growth. We saw some movement as well on Transnet with the auctioning of the Durban-Joburg line. That's quite important as well. It's opening up room for further participation by the private sector, which I think is going to be quite positive. So if we see those reforms being implemented, we will end up with better economic growth prospects over the medium term. But implementation, that's the most important thing.
And what about you, Annabelle? What's your final comment?
Look, I think that, and not to cover anything that Isaiah said, I think that we also need to consider the private sector in South Africa. I think that a greater crowding in of the private sector into the economy and a reduction in the size of the state, also the control of the state over the economy, and of course the impact that it has on the economy, including the stifling regulatory burden in some areas, is actually key for South Africa. But I think we need to take it further than that. I think we obviously need to look at the private sector themselves, taking greater ownership and decision making in the economy as well. The government has really pushed back very heavily over the past 25 or so years to try and constrain the private sector and not really wanted to have much participation or discussion. I think you even sometimes see that still persisting in some areas, like coming through in Transnet in terms of interaction with the mining sector. I think that the private sector needs to stand up for itself much more substantially going forwards, and particularly given that very poor performance that taxpayers have received in South Africa from paying for our government. I think this is becoming increasingly imperative. So I would would say that it's not just the extension of forums, many of which have been watered down quite substantially, but it's really the large corporates and South Africans in general just really making more of an effort to actually try and get what they want out of South Africa instead of actually being price takers, as it were.
And what about your last comment for the budget, Dawie? Also, what is the message to the business community when all is said and done? Where do we go from here as a team effort from the public and the private sector, given the budget of yesterday?
Thank you, Professor. The question was, do we expect too much from Treasury or the Department of Finance? And I think indeed so, yes. In fact, I think also we expect far too much from the South African Reserve Bank. It's not the job of the Reserve Bank to grow the economy. Unfortunately, there wasn't much said recently about the Reserve Bank and change of the mandate of the Reserve Bank. But the real problem is not Treasury. Treasury is basically what economists call a price taker. And it's the same goes to the Reserve Bank. The Reserve Bank is doing what they are doing because that's the only alternative left. The problem that we have in government, let's name them. Our people like, for example, Gwede Mantashe. Gwede Mantashe, for example, prevented the private sector from generating electricity. I mean, can you imagine that? And gradually, of course, he changed his tune because he was forced to change that. Another example is Ebrahim Patel. Ebrahim Patel, with all his import protections, trying to protect local industries in South Africa, is causing more harm to the South African economy than anything else. That's where the problem is. And the problem is also, I think, included Pravin Gordhan. And the private sector will react to these kind of things. If you create an environment that is conducive to economic growth, and you get rid of people that's undermining the economy, like some of the names that I've mentioned, then the private sector will step up to the plate. I have no doubt about that. The private sector is doing that, in fact. So we can't expect more from the private sector. They will do that in any event. All you need to do is to create an environment that is more competitive and create an environment of a more efficient state. And that certainly we do not have at the moment.
Well, thank you very much to the panel for your valuable contributions. I think that our understanding of the budget and its broader implications has been shared with all of you. Thank you for your interest in the Pitso. And I thank the panel also for their contribution, for the valuable thoughts they've shared with us. And I think we all now leave this Pitso with a better understanding of what the budget means, what the challenges still are, not only of the budget itself, but the challenges that lie ahead. Thank you very much, and we sign off with this Pitso. Thank you to the panel again.
Thank you very much, Prof. Raymond. We really do appreciate it.